All right, welcome back to Financials, up 5% during this week, filled with volatility. Mike Mayo is now out with a new call on Bank of America. He reiterates to top pick on that strong net interest income growth. It is one of our calls of the day. Price target $66, 56% upside from here. Pete Najarian, you own Bank of America stock, and you're long the calls.
I do. Yeah, and we've had a lot of option trading in there, Scott, over time, and they're looking for upside. Recently, it's been a little tougher to find, although we're starting to see a little bit more now in terms of the movement to the upside from Bank of America. I would challenge you this. Bank of America versus J.P. Morgan, at almost any time frame in the last year, you'd much rather be in Bank of America. Why is that? J.P. Morgan's a great company, but the price to book, which is how we oftentimes look at these financials, you look at Bank of America, it's been too cheap. It's been a great company that's been too cheap. J.P. Morgan was overpriced with a 2 multiple on top of that for a long period of time. It's now pulled back, so at some point in time, maybe it can catch up and start moving with Bank of America. But right now, I think this is the stock to own.
Michael Farr, you choose Goldman Sachs, PNC, and Truist. Why?
I like them all. I mean, you've got strong companies, strong dividends. I think a lot of these people maybe might be from Missouri who needed to see if the Fed was really going to do what they were going to do. In a higher rate environment, they're all really well positioned, I think. And, you know, you get stocks like PNC, $74 billion on the Fed's balance sheet that they can put to work in other areas at higher yields as these yields increase. 2.75% dividend, Goldman north of 2, Truist almost 3% dividend. I mean, they're not expensive yet, and this is a much better, much more friendly operating environment. And as you can tell, I like these more regional names. PNC would probably be my pick.
But let me ask you this. I mean, here's the issue. The market has priced in 6 more hikes, right? It's done that, and yet rates aren't.
Maybe.
Rates aren't. Well, I mean, that's what it's priced in. If you look at the futures of that, it's not like rates are ripping higher. What if rates, because it's already in the market and there's enough concern about what's going on geopolitically and with the economy at large, what if rates don't go up as much as people think that they're going to do? I mean, I go back to the big calls we've had.
The yield curve is flattening.
Yeah. How are the financials going to work in that environment, Michael?
I think the yield curve is flattening, and it's going to go through this ratchet. We've seen this before through every rate hiking cycle. It ratchets up and down. I think that what you're seeing, though, is still lots of cash. You've got good asset values. I don't think that you're going to see any real credit cycle, huge kind of a problem through any of this. And so I think they're solid. Are they runaway buys? No, I'm not, screaming and pounding the table. I own 3 right now, so I'm underweight the group. But I think as you've got to have some exposure, these are good ones to have.